Hey, how's it going? Welcome back. I want to talk to something that's a very important subject for, truly home buyers and home sellers. It's your contingencies that you find when you are purchasing or selling a home. And I'm going to go over the most common that we see in our market. Let's get to it.
Are you listening? Damn. Yeah.
All right, so let's talk about these contingencies that we can see frequently when we are either, purchasing or, selling a home. It's important that, both homeowners and home buyers understand what they're getting into when they write these contracts. Let's just say that. So the first most common in contingency, or let's start with this. Let me go back. Let me rewind. Okay, what is a contingency? Oh yeah, that's probably the first important question to answer. A contingency is what allows the buyer to back out of the contract. So it's saying, hey, we've agreed on this and we weren't able to do it, so now we need to back out of the contract. So it is basically their outs. And this is very important because for the buyer, there's a lot of outs. The seller, however, they don't really have any. Once they sign that contract, that's pretty much it. They are bound to the contract and have to perform and can be bound with specific performance. So with that being said, let me now start with the most common contingencies that we see. The first one is home inspections. So in Florida, our contract says that, if you don't put in a number, that you will have 15 days to complete home inspections. So I would say that's what we see a lot. A lot of times if it's competitive, we'll see that go down, to 10, 8, sometimes 2 days, sometimes 1, sometimes 0. Sometimes people decide that, they really love the home and it looks like it's in good condition and they're willing to not do any inspections. So for the home seller, that's a great option because they don't have to worry about the buyer canceling really in their biggest opportunity to do so. So during the home inspections, if you're using an as-is contract in Florida, it says that the buyer can cancel at their discretion. So it doesn't matter what the reason is. They can say, the grass is too green and the roof is too new. Peace out. Literally, they can. And that's why the home sellers want that home inspection to be as short as possible. And if there is none, that's even better, right? But the home buyers want that to be as long as possible because they want as many opportunities to be able to receive their deposit back as they can. All right, so next, the second most common contingency that we see is financing. So financing contingencies basically are outlined in the contract, and the buyer will define what terms of their financing are. For example, you might see 20% down, conventional loan. They'll have 5 days to apply for the financing. And application is not the same thing as going online and putting in your social security number and your income. You actually have to sign disclosures, and it's a little bit different than what most people think applying is. So 20% down conventional loan, 5 days to apply, and 30 days for approval. If the buyer cannot get their financing together within that allotted amount of time based on those conditions, then they can receive their deposit back. And if they go over that time period, they lose their deposit, and that goes to the seller. So in this period, obviously this is important. You can't just say, oh, I'm sorry, Mr. Seller or Mrs. Seller, I wasn't able to get financing. Bye. Give me my money back. That does not work. We need to be able to prove that you actually tried diligently to get financing. So the next contingency that I see a lot is appraisal, and this kind of ties into the financing. So appraisal basically determines the value of a home, and it also determines how much the bank will lend you. So all of your numbers are based off of obviously the purchase price, but then the bank also says that, hey, this home has to appraise at that purchase price, and we're going to base all of our numbers off of that if it comes in lower. So if the appraisal comes in lower, then the buyer has the option to cancel the contract and receive their deposit back. They also have the option to say, hey, Mr. and Mrs. Seller, the appraisal came in low. We would love to change the purchase price to the contract or to what the appraisal came in at. So that does happen. Again, there's time periods on this. Normally this kind of falls in line with the financing contingency timeline, but it could be different depending on situations. And sometimes one of the benefits of cash buyers is that they sometimes don't do, they don't have financing contingencies, and they also frequently do not have appraisal contingencies. But with that being said, a lot of times cash buyers still include appraisal contingencies when they buy their home. So keep that in mind. Even though you have a cash buyer, doesn't mean that there is no appraisal contingency. Sale of home contingency. So this is another one that was more popular a few years ago when the market was not as hot as it is right now. You would see a lot of people who needed to sell then buy, and so they would have a sale of home contingency. And when this happens, they say, hey, Mr. and Mrs. Seller, we want to buy your home, but we need to make sure our home sells. Otherwise, we won't have the funds to purchase your home. When that happens, again, if their home doesn't sell within the allotted time period, then they can receive their deposit back if they cancel prior to that time. If they go past the allotted time, they forfeit that deposit. So there's a lot of things that go into a sale of home contingency that you want to consider. Mainly is the home under contract and what are the terms of that buyer's contract, right? Because if that buyer doesn't close on that home, then your buyer can't close on your home. It's like a domino effect. Do you see that? So they're kind of scary, they're kind of risky, but they have a place and they're very, very important for a lot of home buyers who currently have a home and need to sell. The last contingency that I see a lot and is actually coming up more and more recently with the volatility in the insurance market is buyers adding insurance contingencies. And a lot of people and a lot of realtors do not know about insurance contingencies. But you can add those in, and basically it says, hey, I'm going to look for flood and homeowners insurance or one or the other. And I want that insurance to be within a certain dollar amount. Because if it goes too high, I can't afford to pay $1,000 a month in homeowners insurance and flood insurance. So, and then also not only that, but the ability to get insurance, because, and that would be more so for like a cash buyer. Obviously, if you are using financing and you can't get insurance on the home, the bank won't lend on it. So, your financing contingency kind of protects you, with not being able to get insurance. With that being said, you want to make sure that you aren't overextending yourself on the monthly cost of insurance. So that's where a lot of times the insurance contingencies come in. So that was a quick rundown of contingencies. There's obviously a lot of things that go into it that can change how we do things. And each individual homeowner and home buyer's situation is different. So that's when you sit down with your licensed, experienced realtor to determine what contingencies you need and what you want to give up if you're in a competitive situation. All right, that's all I got for today. Thank you for stopping. Make sure you subscribe. Bye.